Alrighty, Bitcoin time.
Lights down.
Check.
All right, yeah. So my name's Red, and I like Bitcoin, but these guys all build stuff with Bitcoin, which is much more interesting. So I will let them all introduce themselves.
I'm Francis. I work at Starkware, focused on Bitcoin and BD.
David Searay with Alpine Labs.
I'm Talib from Stra. I'm a DevRel engineer.
Ruben, I lead product at Bob.
Awesome. So the topic of this panel is Bitcoin scaling. What is the best way to scale? Can you all briefly explain what is the protocol that you're building? What's the protocol that you're working on?
I guess I will. Hopefully, we can just build off each other, so we're not repeating the same thing. Because there's some primitives which I think probably need to be explained. But generally speaking, a lot of us here are building rollups. And a lot of that involves zero-knowledge proofs. So essentially, a zero-knowledge proof is the ability for a really, really weak computer to monitor a really, really strong computer. With Bitcoin, that's very important because we want to have a really decentralized base, meaning that we want every single full node to be pretty low-powered so that anyone can participate in the network. When you start to get away from that with really, really high-powered like computers for being able to participate and fully validate L1, it gets a little messy, right? Because not everyone can afford that. But with zero-knowledge proofs, we're able to maximize the utility of that really weak computer, Bitcoin full node, to monitor the computation being performed on a layer 2, and to know that it was performed with absolute integrity. So that's what we're building with specifically Stark proofs.
Yeah, there's actually a very cool, rich history of zero-knowledge proofs in Bitcoin, as far back as actually like the Starkware guys kind of pioneered a lot of these concepts. And then in I think 2022, they put out a grant with the Human Rights Foundation, and a researcher by the name of John Light kind of showed how this idea was possible. And then BitVM came along, and now it's kind of converging all of these different ideas. So yeah, we're pursuing a Bitcoin rollup, and that's a little bit of the backstory.
Yeah, so we're building Stra. It's basically based on the paradigms that Francis and David explained. It's a ZK rollup on Bitcoin that's also EVM compatible. And it also comes with a bridge that uses an idea called BitVM. It's essentially an interesting way of verifying snark proofs on Bitcoin scripts in an optimistic way, I would say, without, not too much playing with the definitions and stuff. So we're basically building a rollup on Bitcoin with a trust minimized bridge, or ZK bridge, you would say.
And so Bob is a hybrid L2. So we roll up to Ethereum via the OP's superchain. So we're trying to bring all of the EVM experience and tooling to Bitcoin DeFi and Bitcoin yield use cases. We're also working with the BitVM technology to try and create more of a trust minimized bridge where people could take their Bitcoin, make it usable in the EVM world. So that's Bob.
All right, so I heard from all of you roll up. And there are many constructions you can use to try to scale Bitcoin. People are building state chains, state channels, various side chain constructions with integrating merge mining and stuff. But all of you said roll up. So correct me if I'm wrong, but the question is solved. We're all building the same thing, right? You're all building the same protocol.
Do you want to start? Or do you want me to go?
You start.
I mean, a rollup is a separate blockchain, but it essentially posts its data inside of a parent blockchain. So you can think of like a side chain, except it doesn't have a separate consensus system. And this is incredibly important because in blockchains, there's effectively almost, you can think of it as like a blockchain law of physics, where if you try to bridge assets across different consensus systems, there's always some sort of inherent trust assumption that gets added. And no amount of BitVM zero knowledge proof can fully eliminate that. You can reduce it pretty damn good, but you can't necessarily eliminate it. And so a rollup has the benefit of being a chain that shares the consensus of its underlying layer. And so I think like ourselves at Alpine and Citrea kind of have the most purest form of this. It's a rollup built directly on top of Bitcoin. I think for now, at least Starkware is a rollup built on top of Ethereum. Maybe there's some mythical stuff that allows kind of dual settlement. And then I think Bob similarly is also a rollup on Ethereum. All of these are viable solutions to create a trust minimized BTC peg. But that's kind of the difference is, does your rollup settle to ultimately which settlement layer does your rollup roll up to?
Well put. You caught me there. They're not all exactly the same, maybe coming from different angles and maybe converging in the same place. But the other point that we were talking about, you guys heard zero knowledge proofs and validity proofs. There's definitely confusion on to what degree that tech can be used on Bitcoin. It's something that is used much more often on other networks, and it's more of a solved problem in other places. But I mean, to what extent can we use validity proofs today?
That is a good question. Right, I actually think about that a lot. So as of now, you can actually probably, I say this with like 95% certainty, you could probably use Bitcoin script, which is just like a series of very like low level commands in order to hack the verification of a zero knowledge proof. But the issue is you only have 4 million of those in which you can use, and you'll eventually run out of space and you won't be able to complete it. Right. So that's sort of where we sit right now. If you are to see soft forks like Opcat, we can drop that considerably, and we can actually verify a proof within Bitcoin fully, and there will actually be a verified proof. And I don't want to get into ZK versus validity proof quite yet, but you'll actually be able to do it. With Satria, Alpin, and some of the BitVMs that we're starting to see come out, they're actually sort of chunking the proof and turning it into something optimistic, so that instead of having to verify the entire proof and execute the entire proof, they actually find a spot within the proof verification where people disagree, and then they execute that specific portion. I'm not a BitVM expert, David is, but I wanted to give that one a shot.
Yeah, so maybe I can just step up this to intermediate level, and then David can take over. So the problem is we have 4 megabytes of Bitcoin block size, and you cannot really do much with it in the sense that, so currently we can verify snark proofs just using the commands of Bitcoin script. But the problem is this whole verifier script, which just looks like an SMD code, is around 1 gigabyte of text file. Like if you were to put it down in a text file and then you would check the size of it, it's around 1 gigabyte. And the problem is like you have only 4 megabytes. So you just cannot do it natively. You cannot just expect to put some proofs and then run your script on Bitcoin and then based on this do something. You cannot simply do that because Bitcoin script does not allow you to do so. And so that's why we're kind of trying to come up with alternative ways to basically being able to verify some proofs in different ways. And this is where this optimistic word comes up. So the way this works is you basically, on these type of projects, you basically assume that everything's going to work fine, and if they don't, then you basically verify which part of this proof verifier code may not be correct and throw out some errors saying that, okay, this is completely wrong and there's something off going on. And so to do so, you basically chunk this verifier into pieces, and then you just commit to them in an interesting way that maybe David can explain much simpler terms than me, because I think I might be overcomplicating it.
Yeah, I mean, I'll just quickly say, like, the long short of it is Bitcoin actually can verify zero knowledge proofs. Verifying a zero knowledge proof is, for the most part, I'm oversimplifying here, it's just performing multiplication. But Bitcoin can't do multiplication; it can only do addition. So, kind of what both parties are here saying, it's like we can verify it, but it's just like it's freaking huge. It's like, it originally was like 30 or 40 gigabytes, not just 1 gigabyte. So a lot of the work over the past year is saying, okay, we theoretically know that we can, optimistically verify these zero knowledge proofs on Bitcoin, but like this thing's gargantuan. So a lot of the innovation has been really like, how can we do multiplication more efficiently? And it went from like 30 to 40 gigabytes to, I think actually like the current bleeding edge is around like maybe 600 or 700 megabytes. So there have been like huge improvements here. But yeah, that's the long short of it, hopefully.
Yeah, great explanations on it there. It really comes down to recap what some of them said. You could do the zero knowledge proof verification on chain. We have limits in terms of how much this is going to cost and block size. So the better way to do it is let's do the proof elsewhere and let's optimistically verify just the bits and pieces we need to on chain, keep as much off chain as we can. So I want to ask you guys a few questions. Please only answer in one word. If you all agree with each other, we're moving on because that's no fun. But if you disagree, we'll dig into it a little bit. So first up would be true or false, Bitcoin can only scale through L2s.
True.
In the current form, or?
That was more than one word.
True.
Okay, everyone agrees, no fun. We're not going to get into that. Next question.
I need Roger.
Next question is, BitVM is the answer to scaling.
False.
Interesting. I thought someone would fight for BitVM. Next one. It would be good to have covenants.
True.
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 Okay, no one's going to argue with me here. So we're going to get into BitVM a bit, and we're going to say no covenants. BitVM is all we have. Is that enough to scale with L2s?
Well, Bitcoin is BitVM is an emulated covenant, right?
Yeah, but it's not a covenant.
Okay, fair. So is that enough?
BitVM is also doing some fun steps for us for state validation. So it's not just the bridging.
So
But
we
no
have,
covenants. Is BitVM enough? Can we get the L2s we want?
we have BitVM and we have discrete log contracts, right? So I think
Yes.
discrete log contracts also deserve a role here.
What are those? I've never heard of that.
I think the vast majority of the use cases for BTC are as collateral, in my opinion, and the ability to borrow cash against your BTC. And DLCs can provide that in a slightly capital inefficient way. So I think that they can get us pretty far in a not super efficient way.
Overrated.
Overrated for the reason that I said they're capital inefficient.
Yeah, they're capital inefficient. You have to like pre-sign everything ahead of time. You're probably going to get like bad liquidation terms. Like DeFi has better loan terms than what DLCs can do. You know, there's limitations.
They're also
on,
not continuous.
on like, yeah, the lender could technically like block you and prevent you from paying back your loan. I just, don't get me wrong, very cool. I'm happy we have them, and like some of the teams building them have done great work. But I don't see them as the end all be all.
You could say some stuff about that, like BitVM too, though, right? We're doing the best we can, guys. Bitcoin is hard.
So what do we think on the far end? If we never get a covenant, all we've got is BitVM. You know, are Bob and Satreya going to reach the state that you would, love to see in the perfect world? Are they the form of L2 that you want without any changes?
So if the question is more on the side that if we're not getting those, is the BitVM best solution? So it depends on how you see it. So you cannot obviously get like trustless verification of proofs or something like that. Anyone saying that is just blatant lying. You can just ignore them and like never interact with them at all. They're just dishonest people. If you're kind of trying to come up with much more easier and much better technical breakthroughs, then my opinion is we may get better versions of it. We may get a BitVM 3 that a genius comes up with, and it's much better. At the end of the day, there will still be some trust assumptions, but from the last year of like all the innovations, if you check what happened, like everything just improved massively, and I believe there might be some diminishing returns over the time, but I will say we will see much better constructions over time, even without covenants. But obviously, like, we all would like to see it, I guess, everyone in the stage. So,
yeah, I'd agree. I think BitVM is kind of a good enough solution right now. So, if you can imagine a scenario where you can unilaterally like withdraw your Bitcoin back to native Bitcoin from like an EVM world, then I think it's good enough to unlock a lot of use cases from Bitcoin, get a lot of latent capital off the sidelines, and start experimenting with like the end user use cases. So I'm excited to see just what BitVM unlocks just by itself.
Cool. So we talked a little bit about the what of Bitcoin rollups, kind of what that would look like, what those are. We talked a little bit about the how of how do we get there, things like validity proofs, BitVM, future iterations of that, or maybe even new opcodes. But now we're going to assume we're in our perfect world. We have the rollup constructions that we want. They are as connected to Bitcoin as we would like them to be. We're going to talk about adoption now. So what form of adoption, like who do you see being the primary users? Is it crypto, Bitcoiners, or no coiners? Like are new people going to come in for new use cases?
There's, I think, two different categories of users. Like we can look at the history of like markets over a long period of time, and there's always going to be a lot of shenanigans. Like that didn't start with crypto. It just sort of enabled some of it. So there will continue to be shenanigans within Bitcoin L2s. Like you can't really stop that. There are some use cases which just exist. However, I also think that there's some really valuable use cases out there. One in particular that I believe is pretty important is like if you look at LATAM, they have like 18% of LATAM owns BTC, right? If they bought that in 2017 when we had 47 million KYC Bitcoin users, they now have, say they bought $1,000 worth, they now have 10K. That's a significant amount of money, and it's one of the biggest assets in their portfolio. So I think simply giving people the ability to borrow against their BTC and borrow local currency. So borrow local fiat shitcoin and save your Bitcoin. I think that's one of the use cases which I'm personally most passionate about.
I may show my maxi head a little bit here, but for me, like the quintessential revolution is money. Like that is the product market fit. And if we build other things on chain, like I don't know, Uber on blockchain, like great, fantastic. But like I am in this for the separation of money and state. and that is something that doesn't apply to just no coiners or crypto bros or whatever. That applies to everybody in the entire world. Like the fundamental building block of a free society is property rights. And, the only thing more important than property rights is agency over yourself and your own mind. But after that, the ability to take the fruits of your labor and invest that and build into something, and then be able to store your wealth, like that core ability to have money and free money and like uneffable money is something that the entire world deserves, and that is like bereft for most of people in the world. So for me, like assuming we get past all of this stuff, I think Bitcoiners, for all of their faults and like all the things that they've gotten wrong on the technical side, I think they were absolutely right about like what this revolution is about. And I think seeing this convergence of like verifiable computation and ZK now coming to Bitcoin as the monetary revolution, like this is going to reinstate our industry back to, frankly, like where it should have been, 15 years ago, like all the hopes that people had for it. So to answer your question, yes, like it definitively applies to everyone.
Yeah, to build on that, people all around the world hold Bitcoin as a self-sovereign store of value. And so you can imagine that the more successful Bitcoin becomes as a store of value, the greater percentage of people's personal net worth it'll make up. And at the same time, people have to pay taxes and live. So there's this ironic twist where the more successful Bitcoin becomes as a store of value, the greater the personal sell pressure is, because the greater percentage of your net worth, the higher the likelihood that you might have to liquidate or sell some of that Bitcoin to survive. So I think the solution to this is making, Bitcoin usable to where people aren't forced to make that tough decision to sell their Bitcoin to, avoid jail time because they're not able to pay their taxes otherwise. So, as mentioned before, like a really big use case is making Bitcoin collateral, where you can borrow against, and in the same way that people do this with real estate and the best, stores of value that they can get their hands on today. So I think that's a big use case for usability. And I think besides solving that issue, we have to solve it in a way that, allows people to retain the properties of Bitcoin. We can't, have people being forced to give up custody of their Bitcoin just to make it usable.
All right, so I'm hearing a lot of...
Can I disagree with that?
Ooh,
Last
all
comment
right.
there. So I actually don't think that's true. I think that the goal of Bitcoin should be more than just like sort of like a scientist experiment to make the most trustless thing possible. And I'll point to a specific area in rollups where I believe that's true. But like the goal of Bitcoin should be to help as many people as possible. If the best way for them to be able to achieve what they need and like to improve their lives is custodial BTC, like I'm okay with that. Like I think that the goal should ultimately be like mission driven rather than technologically driven. One area where I see that in particular is like data availability, right? Like I think off-chain DA does cause like a slightly lower trust assumption, but for the vast majority of users who don't have a lot of money, it's good enough. And I think that we should also be celebrating sort of the in-betweens and things that just like increase the usefulness of Bitcoin. I think that should be the goal.
I will say then, I think it kind of hugely depends. I mean, it obviously depends, but it usually depends on how you view the things. So to me, like, I value the quality of these things that we build and the quality of the adoption that people get more than the adoption of, all the public and all the people. Because I do believe that we won't get there for quite a long time even still. And it's just, maybe not suitable and maybe blocked by, some group of people that just don't want self-sovereignty among people. But I think like there are some serious obstacles that we may not be able to break in our lifetimes that I believe. I'm a bit pessimistic on that. And the way I see it is I just try to find the best solution in the ideology-wise that I believe that can get the most returns to the amount of effort that I put. And if it aligns with my ideology, then I'm okay with it. And that's exactly what, I'm working on this. But the UX-wise, the knowledge of people, the things that we're trying to achieve are just still feels like so primitive, even though they're technically hugely complex. And I think like this is something that I think on my free time, if it makes sense.
A lot of these points on adoption are asset focused. And I think there's definitely an asymmetry in the mind share of Bitcoin. BTC, the asset, has this huge mind share. Bitcoin, the network, not so much, in that there are absolutely more users and holders and people exposed to BTC than people that interact with Bitcoin, the network. So it's kind of interesting. We're talking about how this amplifies the asset, but we're on this stage because we're working with the network. Do you think this kind of grows the network's mind share by building Bitcoin layers of various architectures, and having unlocks like getting BitVM into production, or things like CAT that you mentioned, Francis. Like, does this also grow the network, or is that a means to an end of growing the asset?
I'm a little. Can you ask that
Yeah,
one more
yeah,
time?
I agree.
Let
Clarify the
me-
question, please.
Restate that for you. When I asked you guys about adoption, the answers were about the asset. You yourselves are working with the network and working on breakthroughs like BitVM that can we extend the network. So you're really focusing on the network, but your answers about adoption were all about the asset. Is working on the network and trying to get things like BitVM in production just a means to an end for more to do with BTC? Or do you want more to do with Bitcoin, the network? Do you want like crypto sectors to move onto Bitcoin, the network?
These ideas of the asset and network are like inextricably linked. And I think this is like something that is not well understood, which I kind of mentioned earlier. Like, if you try to expand the usefulness of the asset by bridging it away from the network into a different consensus layer, then you are re-adding trust assumptions back onto the asset. And so these things, there is a divergence there where in its truest, most pure form, if you are trying to increase the value of the asset and create its highest value of like the lowest amount of trust assumptions, then you are in fact building on and extending the network. So for me, these ideas are the same.
Okay, to what Francis mentioned before, you were saying, hey, if we use off-chain DA, some volition model, and you can opt in if it's too expensive, that's still pretty good. Like that's in the right direction. We're moving forward and creating better systems this way, but this is adding new trust assumptions to the asset. So it's kind of like this hybridized version of scaling.
So okay, this is one of my favorite subjects, and we're probably going to get too technical for what we should be talking about here. But like, I think that off-chain DA is actually better than watchtowers, which are considered acceptable by the Bitcoin community and Lightning. What a watchtower does is it essentially makes sure that your peer does not try and exit back to L1 when you are offline. So say, for example, there was a previous state to the channel where David has more BTC than me, and then he sends more BTC to my side of the channel, and I, in fact, have more. Then I go offline, and David publishes an old version. We're going to rely now on a watchtower to say, hey, that's not true, and help with a fraud-proof transaction to make sure that David doesn't steal my money. But in reality, it's pretty likely, I think, that like the routing peers that you have on Lightning Network and the people who run watchtowers are pretty much one and the same. And so they can actually collude and potentially steal your funds. With off-chain DA, you may not have access to your funds because no one has pushed a essentially like a data availability on-chain. So you don't have anything to check the fact against. But the party that didn't push it on-chain can't actually steal your funds. And then a third option, which I think people also don't seem to appreciate quite enough, is something called an adamtium, which essentially says that if you as a user or as like someone who sort of speaks on behalf of a larger group of users, don't sign off on the fact that you have received data availability, the like fact that allows you to push the network forward, then and you don't get a signature on that, there is interactivity there, then the only valid state transition that the L2 can make is to exit you from the chain back to L1. So you essentially boot them off. So I think that data availability is particularly a subject of rollups, which is just dramatically misunderstood and oversimplified and honestly used as a crutch by people who don't understand rollups well enough to attack them.
I agree on the adamtium. I kind of disagree on the alternative DI William stuff, because the reason like we are building on Bitcoin is that Bitcoin has its own value, like in the fundamentally in its core, and like we know that it's going to be existing in one way or in one form or another for probably the way humans continue to live. At least that's what I see. But I cannot see the same thing on an alternative DA solution where even though they're super cool, even cypherpunk people that also share the same vision with us, they're essentially kind of profit-seeking companies where they're also doing the upgrades and the this kind of technical vision that carries out for the future. And we may not know if they will continue to exist or cease to exist in the next following years. I mean, for a close future, they probably are, but for the distant future, probably I would say not. But does it matter? That's up to you. Maybe not. So that's just my opinion.
Yeah, so I know Citria has been talking about how they're going to be putting all of the data availability on Bitcoin, but Bob, as an OP stack rollup, is putting it on Ethereum right now, but I know they got a roadmap that hybridizes this a bit. What's the design trade-off to start on Ethereum versus the Citria model of them planning to, just go right to Bitcoin with DA?
Yeah, absolutely. I mean, to answer your initial question, I do think if forced to choose, I would say like the Bitcoin network is more of a means to an end to the asset. And regarding DA, I also have a high tolerance for, there being room for solutions for off-chain DA. I think it just is going to come down to the use case on, what the trust assumptions are for the DA and versus performance. And so we're starting, with DA solutions on the EVM world. That's kind of, where we're starting our home base, and then looking to branch off. We're still in the works of formalizing what that roadmap's going to look like. But we see like plenty of options on the DA side, on the Ethereum side. So I don't know how exactly that's going to shake out, and the order and priority of what that roadmap's going to look like. But we're certainly open to like expanding beyond EVM.
I'm going to back it up for a second to what we discussed about Lightning. So the difference is it's like finality, right? You submit a transaction on a rollup. You don't know that transaction is final until you wait a few seconds and you get a block. You need to wait until that block for finality. Otherwise, the sequencer could roll you back. It's the same way a pending transaction is not settled yet. So that's just finality with rollups. They timestamp every few seconds and they lock it in place. The situation with Lightning is your finality is kind of up in the air. You don't have finality until you close your channel, sort of. But if someone ever tries to submit something that's old, i.e. that would be like a finality rollback, you can always challenge them. You can always prove actually there was something newer.
If you're online.
If you're online, or if you're using a watchtower, but then you're trusting the watchtower. Yes. So Lightning was, kind of the original L2, I'd say, and maybe the only real L2 today, depending on what you think about state chains. But in this world with ZK rollups, is there a home for Lightning? Is there a home for eCash, side chains? Like, do we obsolete some of the other constructions?
No, Uno reverse. You take that one.
I mean, the politically nice answer is yes. Of course, there's room for everybody. Okay, like in all seriousness, I think there's like some truth to that. Like Lightning does provide like high value and like, but more of a niche use case. I think it was misconstrued as this kind of like panacea solution, and that kind of worked against it. And so yes, there could be a spot for Lightning or state chains or Fedi mints. But like net of all trade-offs, I just feel like definitively rollups are the best solution. And there is a theoretical future world where anything and everything that all of these other systems can do, including lightning speed, microtransactions at scale, like rollups with the power of like volitions and pre-confirmations and like finality gadgets, like it can essentially recreate all of that. So for me, rollups are the closest thing to the theoretical optimal solution.
You go and then I can.
Okay, so I'll say some nice things now because I kicked it over to David for the tough ones. So I think for potentially like forced exits, Lightning could be pretty interesting. If you want to like leave the layer 2 to a Lightning channel, perhaps that could be like good for off ramps. Another thing that's nice about Lightning is it fails gracefully. So like one issue which I think is fair with rollups is you're in a canonical bridge and everyone's in that canonical bridge. And if there's an issue with that canonical bridge, then everyone has an issue. With Lightning, it's you and your buddy and your channel. And if that messes up, you're screwed, but it's just you guys. So a graceful failure, I think, is something that's nice.
Like obviously the new solutions will basically capture some of the existing value from the existing layers, obviously. And some of them may also cease to exist in the future. That's also possible. But the way I see it is actually we can, like the tech is evolving day by day by day. Like we're launching and, Starkware is coming and Strata is coming and Stra is coming. And due to their execution environments, actually there are ways that they can work together collaboratively. Like there is a way to do now using the HDLCs, do atomic swaps between an EVM execution environment like Strata to Lightning back, like between them in bidirectionally. You can also do it between Bitcoin and this environment. You can also do it with different kind of execution layers that is already functioning in this form of sidechain or like some state chain form that has the one-of-one trust assumption and so on and so forth. You can do this stuff, and it may actually improve their usage as well. Like if our solutions tend to become much bigger, then they may also benefit from this. So like obviously it will be a problem for some of them, but I think it's not that detrimental for their existence. That's what I see.
Yeah, I think Lightning was a huge step forward, obviously, but there's only so much you can do, like with state channels for many DeFi use cases. And so I think there's kind of a practical point to be made, which is that in the same way that we want to meet users where they are for adoption, I think we also need to meet builders where they are as well. And there's just so much mind share going into the rollup space that I think the majority of solutions are going to end up being, that's going to be the center of gravity is around the rollup design.
Cool. So 2 problems in Bitcoin today. You can comment on one, both, or neither. Centralization is a concern. Some people don't really like how much hash rate certain pools have. And then fees, there's either not enough fees and the chain's going to die, or there's too much fees and I can't afford to use it. So do either of these issues change? Are either remediated by L2s?
Hearing the Mebel arguments against Bitcoin, which require people to be using 10-minute blocks for a lot of trading activity, in light of the fact that paper share pools exist and become more centralizing as price goes up, is actually, to me, one of the most frustrating things about being in Bitcoin. I think there's an actual cognitive dissonance practiced by a lot of the community. Essentially, I want to explain what this means quickly because I think it's really important. But a paper share pool essentially is the preferred payout method for miners. Miners, they win blocks. Say you have 1% of the network. You don't win 1% of every block. You win 1% of blocks based off of a Poisson distribution. So you can foreseeably go, potentially even weeks, I think, without winning a block. And that means you can't pay your electricity bills. So they go to mining pools who help them curve their payouts so that their payouts are consistent. And they particularly like paper share pools, which means that for every single share that they produce, every single hash that they produce, they get paid. And you need a whole lot of capital to front that. And when you are the one fronting that, you're the one broadcasting the blocks. And that means that you're actually the miner in reality. And the more Bitcoin price goes up, the more capital inefficient that becomes. So potentially the more centralizing things get. So yeah, that's really a product of Bitcoin's 10-minute blocks because you have a not very big sample size, which again is a little bit ironic because the 10-minute blocks create a lot of pressure around paper share pool centralization, but minimize the potential risk of people actually trading on chain and creating Mebel opportunities.
Okay, first of all, address fees. Bitcoin miners are going to have so many fees, they're going to get tired of earning fees. Rollups are going to post so much DA that, part of the BitVM economic calculation, you have to assume the worst case scenario of where you think Bitcoin L1 fees are going to be. I think right now they're 1 to 5 sat per VByte. We're projecting them to be 500. Imagine 500 times earning as much fees as they currently are. I don't think miners realize how disgustingly rich they're going to become in this rollup paradigm. The second thing is, I do think miner centralization, in particular the hash, the pools, is an issue. I think we're very fortunate that we've seen Bitcoin kind of go through this whole civil war, knowing that we can UASF and the economic nodes rule if necessary. But yeah, that's obviously not ideal. I would love to see Stratum v2. I would love to see more miner decentralization. I think that's a legitimate concern.
So everything is social consensus, and in a world where both Citrea and Strata is live, then do you see a way that miners are pressured to not include our transactions, even though they're much profitable by any entity that is powerful enough?
You're asking me if the Bitcoin L1 miners are going to censor?
Yep.
Well, okay, then we might as well just pack up our bags and go home. The revolution's over. Thanks for coming.
Well, we trust them to worry about their wallets and take the transactions.
We can give you the Eric Voskuil on this, pulling a name out of the hat from a long time ago. The more those transactions will just continue to sit in the mempool. They'll continue to accrue value, and that creates an incentive for new miners or new pools to come on the network and mine those blocks. So you could be censored for a period of time, but the Bitcoin network is never in a single state forever. So that just creates an incentive for someone to come and mine those transactions. So I'd say no.
Great. Shop is open. Game time.
I think the topic's been pretty covered. I also think DA is going to be a huge boost to miner fees.
Yeah, miners are going to be filthy rich, but not from MEV. That's what I'm hearing. All right, so we've got 5-ish minutes left. One final question maybe is what does the Bitcoin scaling landscape look like in 5 years? We've had time to put things in production, take off the training wheels. What does this look like in relation to crypto and for Bitcoin users?
Can I make a request? if we have a little extra time, can we talk about CTV and check sig from stack?
Yes, we can.
Okay, can you ask your question one more time? Or you go first.
All right, 5 years from now, where are we going to be with Bitcoin scaling for Bitcoin and in relation to crypto?
Okay, we have, I think we have OpCat or something very, very similar to it. We have Bitcoin DA taking up 95% of block space on BTC. And more people are using Bitcoin than ever. More people are borrowing against their Bitcoin than ever. And yeah, I think that's
5 years from now, Ethereum's dead. No, I'm just kidding. I actually have a huge, tremendous respect for Ethereum. Like, we actually owe virtually everything happening in Bitcoin right now to like a lot of the breakthroughs that the Ethereum community.
Yeah, built on the EVM.
Yeah, built on the EVM and like a lot of the innovations on like the ZK front. So it's mostly me just kind of giving Ethereum a hard time. But yeah, similar to what Francis said, I'd love to see native ZK verification, whether that's a CAD verifier or ZK verify or opmal in there, and then maybe kind of some alignment on like ways to like avoid fragmentation.
I guess the number one thing I'd like to see in 5 years is the vast majority of DeFi TVL being centered around Bitcoin. I think if that takes place, then you can almost make the assumption that we've got all the infrastructure stuff figured out. And I guess maybe a second would be, BitVM's used as like a standard way that, people are making their Bitcoin more usable. And there's a lot less counterparty risk to make Bitcoin usable.
USD BTC price is established on chain predominantly versus on a centralized entity.
Ooh, I love that.
I hope it happens. I'm a bit more pessimistic on that. I don't think we will get a generic ZKP verifier, and maybe we can get OpCat if things starts to become way too chaotic for everyone on the L1 level once rollups go live. But if it turns out to be somewhat sustainable, then probably we will get CTV and CSFS and some bunch of opcodes that might be less harmful than what people think, and but not cat. But by the way, I'm a huge cat fan. But that's just what I see.
All right, we're throwing a lot of acronyms at you. You've heard CTV, check template verify, and CSFS, check sig from stack. I'm going to do a very quick explanation of what those are and give it to these guys. Check sig is how you sign every Bitcoin transaction. Check sig from stack is, okay, the thing that we're signing doesn't have to be the transaction, and the signer does not have to be the transaction sender. We can use it for other things. CTV is, can I put a restriction on how this output is sent? So UTXOs are kind of ephemeral and stateless. They only exist right now, and they're not worried about what happened before or after, but can we add a condition like that? And that would help us, kind of carry over state in a sense. But that is the gist of, these opcodes being discussed. I'll kick it back to you guys. Tell me if I'm totally wrong.
No, you're right. I think the question is, do we have consensus right now? And I think we're damn near close, right? Like
we're approaching it.
So to be honest with you, I think a lot of the people who are against CAT are against CAT for like non-technical reasons, to be quite honest with you. And they may be able to slow things down, and good for them for just being a pain in the butt. But with check-sig from Stack and CTV, I think those are positive steps forward for Bitcoin. And I personally, speaking as myself, just want to support that.
I'm curious, actually, Francis. Like, would you? It sounds like yes. Would you support CTV and check-sig from Stack if it doesn't have CAT in it?
Personally, yes. 100%.
Okay. Yeah, I tend to agree. I mean, I would love to see CAT as well. I think it's a superior way to do all the stuff that we've talked up here about. With CTV and check-sig from Stack, we could like massively improve BitVM. Like the vast majority of like the economic costs in BitVM are from like these things called land port signatures. We could basically eliminate or like hugely reduce them. So it is beneficial. It's not the game changer, but I think it's more important just for Bitcoin to like flex its muscles and be like, oh yeah, this is how I remember how to like activate this stuff. And we kind of kick the ossifiers like a little bit to the curb here. So that's why I'm supportive of it.
Any more takes on those? All right, one thing I will share is we talked about a lot of different technologies. They're not rivalrous in the sense that CTV and CSFS are not rivalrous with CAT. Getting all of them would not be redundant. They would actually kind of fuel each other. And BitVM is not rivalrous with Covenants either. Covenants would make BitVM, so much better. So none of these are competing technologies. It's more of a discussion of, what is the order to do this? Which ones have the smallest attack surface and are maybe safest to do for more risk-averse people? It's not one or the other for any of these. So I'll let everyone give a closing note on, kind of anything we discussed. Is it opcode stuff? Is it why we should build rollups over some other construction? Just closing notes.
I think more people should look into Adamtium, which is interactive data availability.
I always end by saying there's never been a more exciting time to be in Bitcoin. And I truly mean that. I think the last 4 years or so, maybe even longer, was like huge cope in the Bitcoin community. And now it's like, no, we can actually do this, and we can actually jump basically to feature parity with everything else in our industry. If you're not on the Bitcoin train, what are you even doing?
Rollups are coming. It's going to be really fun, really chaotic. You'll enjoy it. So thank you.
Yeah, and we're all basically trying to solve this problem of adding programmability and usability to Bitcoin. I think it's only a matter of time before this really breaks adoption and really is the default way that people access DeFi in many different use cases. So I think landscape's going to change really fast, really soon in the favor of Bitcoin.
Yeah, very cool stuff happening in modular Bitcoin world. 4 very cool projects here. Ask them some questions afterwards if you'd like to learn more. Thanks, guys.